In our today's session of Market Movers, we will be taking a look on the USD JPY to see if there are any emerging opportunities for us to exploit to our advantage after the change of framework by the Federal Reserve, in which now the Fed is going to target the average inflation, not the fixed target of 2%, and that has resulted in the renewed weakness in USD, and we will see if the USD JPY is going to go to 105 level. We will try to see if there are optimum levels for entry and exit for the trading purposes. If you consider the trading context for the day, earlier in the day we got these data coming in from China, and the PMI numbers for manufacturing as well as non-manufacturing sectors are pointing to the continued expansion in the month of August. And if we see both these readings, the NBS manufacturing PMI is at 51%, which is slightly lower compared to the prior month reading, but still it is above 50, and that points to the expansion. And if we consider the services sector, the non-manufacturing PMI, it is showing robust growth here, and it is even better than the prior months, now at 55.2%, 55.2 not percent. Moving on to the European session, we got the CPI numbers for Germany. This is the preliminary data, that is the first estimate. And here for the month of August, there is slight improvement, and now the inflation has entered the neutral territory from deflationary, and now at 0.0%. It is still below the expectation, but of course better than the prior month reading. For the North American trading session, we have the data coming in from Canada, but these are minor releases, so we will not go into the details of that. And for the US, we have this loan release of some importance coming in from the Dallas Federal Reserve. And here we will be waiting for the manufacturing index data, and this is still likely to be in the negative territory, but only the magnitude of decline is likely to reduce to -2. So let's see how it turns out. Now let's shift our attention to the technical outlook. Here first we will see the USD JPY, and then we will move on to the Euro USD. Let's start with the USD JPY's technical outlook first. This is a daily time frame chart, and this downward spiral which is there in the USD JPY since it made a high above 111 is still continuing, and this sharp reversal which we saw in Friday's session after the announcement by Mr. Jerome Powell is a testimony to the fact that this weakness in the USD JPY is likely to persist, and though we are seeing some recovery from the lower levels, still the major trend is tilted towards the downside. The bias is on the bearish side, so we will try to play with the trend and see if there are any opportunities on the lower time frame, as on this longer time frame all we can use is this trend, and apart from that, if we want to minimize the losses in case we happen to be wrong, we will have to rely on this setup on the lower time frame. And here we have this central pivot point around 106.09, so that's not really far from the current level. That points to the resistance zone ahead for the USD JPY, as it is staging a recovery after making low closer to this immediate swing low around 105. And now, as it is trying to approach this level, the crucial marker for USD JPY, we have to see if it is not really able to cross above and sustain above this central pivot point, then that will increase the possibility of again the downward selling pressure coming back and pushing the USD JPY lower. So I feel in today's session we have this opportunity emerging for fresh entries on a short sell side, and of course we will now have to figure out what can be the stop loss, and I think the stop loss will need to be kept above this central pivot point. So we will now move on to the lower time frame, and the regression curve has flattened and was showing some bias towards the bullish side. But again, now that we have this renewed weakness, I think things are likely to flatten further, and in due course of time, if we don't really see a big move on the upside, we will eventually see again the regression curve also tilting to the downside. Coming to the hourly chart, we have this confluence of 50 and 100 SMA and also the 200 SMA. So we have this confluence zone of 50, 100, 200 SMAs around 106 level, and if we get this crossover, the death crossover, that is the 50 SMA crossing below 200 SMA, then that will add further confirmation to our bias, which is increasingly bearish. And as you can see, we also have the lower band of this prior upward moving channel. Now we have a break below that channel, and in due course of time, we will see a new channel with bearish bias being formed here, as we have this formation of lower lows, and after due consolidation we will also be able to say the lower highs. So in the process, we can try to see if there are any emerging opportunities for us, and I feel even at the current levels closer to these 50 and 200 SMA around 106, we can continue to look for the short selling opportunities while keeping the stop loss anywhere near these 106.5 level. So to cut down on the probable losses in case we happen to be wrong, I think if we are fortunate enough to get entry anywhere in the price band of 106 to 106.10, that should be an opportunity which we can try to exploit. And on the lower side, as is the title, we are looking at the possibility of USD JPY falling further, declining further towards 105. So we get the risk reward ratio of 1:2 also. Now moving on to the Euro USD's technical outlook. This is the daily time frame chart, and even after rallying these almost more than 10 percentage point, the Euro USD is not really looking fatigued, and we have these renewed probabilities of Euro USD even getting past the 1.2 levels. So now we have this further upside of almost 100 pips coming our way, and we will have to now rely on the lower time frame charts, as the daily time frame chart is not really giving an optimum entry. All we can infer from this chart is that this uptrend is continuing after this due consolidation around 1.180 level. We have this renewed momentum, and I think now we will have to shift our gaze to the lower time frame to see if there are any emerging opportunities. If we consider the regression curve, it has tilted to the lower side, but the price action has now crossed above the upper band of this regression curve, and it will eventually flatten the regression curve to some extent. And as long as the price action is holding well above this middle band of this regression curve, I think the bias should be kept to the bullish side. And as we have already discussed, there is weakness in the USD, and that is also likely to help the euro appreciate against the USD. That is opening up the possibility of euro USD getting past the crucial level of 1.2. The pivot point series also points to the bullish bias, and here we don't really have key levels in sight. Now the next resistance is above 1.2. It is at 1.2067, and even there is no immediate support on the pivot point series. So mostly we will have to make do with this SMA crossover setup. And if we consider this SMA formation, even from this 50 SMA, the Euro USD is kind of 60 to 70 pips away. So we will need to be patient here, and if things work out our way, if we see due correction and then consolidation in the Euro USD, as long as the price is holding well above this immediate support zone, which is there around 1.185. I would continue to look for buying opportunities in the USD JPY, and any entry point closer to 1.19, of course, after due consolidation, can be looked into. We can utilize this 50 SMA zone to act as our immediate marker. If we see, maybe in latter hours of today's session itself, if we see some correction happening and then the euro USD declining towards the lower side toward this 50 SMA area, then after due consolidation we can indeed look for fresh buying opportunities while keeping the stop loss detail below this 200 SMA zone. Of course, in the process you will have to take the risk, and risk is likely to be higher as we have this volatility, and the stop loss and the target will need to be kept at a distance, and because of that we will have to cut down on the lot sizing to cover for the more pips which we will need to give for the stop loss. So here entry point anywhere close to 1.186 to 1.188 should be a good enough opportunity, but that is really far away from the current level, almost 50 pips. So we will need to sit on the sidelines and adopt an wait and see approach. And I think in due course of time, the 50 SMA will also catch up with the price action. And then after due consolidation, we can indeed think about going for fresh long opportunities in the Euro USD with a target coming above the 1.20. Now that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.